So what is this very valuable tool that we have right here? And I'll say that it is often overlooked for its less intelligent cousin. So we're going to get to that in a second. All right, guys, what's going on? This is Ryan, aka Kenner and Clark. And on behalf of my partner Josh Rigger and I just want to thank you guys for tuning into the BlockRoots YouTube channel. It's always a pleasure to have each and every single one of you. And this video, just like our other videos, we're going to be giving away $100 to one lucky subscriber who leaves a comment below. So it is, what time is it? It is 7:01 p.m. New York time on Saturday, September 26th. So that means that it is sweatshirt and hoodie weather. So where I am, this is my favorite time of the year. It's not too hot, not too cold. It's that perfect temperate middle ground. So everything aside, let's take a look at the market, and then we'll talk about that tool that I was sharing earlier. It's something that is very common in traditional markets. So whether you are a portfolio manager, whether you're a trader, you're a hedge fund manager, typically anyone who is active in traditional markets is going to be using this particular tool in one form or another. So whether they have it set to, one setting or another would be sort of contingent on what their job was or what the purpose of it was, what they were looking to accomplish. So before we get into anything, just as a reminder, so we've been posting about this on both of our Twitter accounts. Phemex is going to be having a trading competition. So in the coming week, we'll be posting more about it. We'll be organizing a BlockRoots team, and hopefully we'll not only have some fun, take some trades, but take a few swings at that prize money. So we're going to be sharing more stuff about this in the coming week, but the competition, I think it is at the end of October that it starts. So yeah, it starts on October 24th. So we actually have some time. But just as a reminder, head over to Phemex.trade, check it out. If you want to sign up for the exchange or sign up for the competition, feel free. That being said, if you're not a subscriber right now to the BlockRoots YouTube channel, don't miss out. Head on over to BlockRoots, hit subscribe. So a little bit about us. We want to be the antithesis to all of the other crypto YouTube accounts. Yes, that's right. Shots are fired. So we don't want to be sensationalist. It's fun to have fun when the market is on the up and up, but we want to remain grounded and really stick to what our core tenets are and what we built our foundation on, which is to provide not only actionable analysis, but actionable education. So to give you things that hopefully can help you become a better operator within the market, whether that is, from a lower time frame standpoint or a higher time frame standpoint. So if you're a trader or an investor, hopefully if you're following along, we'll be able to offer you something that is of value. So that being said, I'm going to be doing more of these YouTubes in the coming weeks. We're going to be rolling out what Josh and I will refer to as green material. Okay, it's not stuff that is going to expire if you miss it, right? So if I put out a video on this day's analysis on the chart, that's not good to you next week, right? So hopefully what we're going to be doing is not only providing, and I don't want to say hopefully because this is what we're going to be doing, we're going to not only be providing that week-to-week insight with regards to where we sit, but we're also going to be providing, again, those tidbits of information, tips and tricks that can really benefit you regardless of your approach. So I'll be posting more of these videos, again, on YouTube. We'll be sharing them on Twitter. And for those of you who are already BlockRoots members, you're already privy to this information regardless. So that being said, let's take a look at the market. And this is going to be a video that has no cuts. I'm going to try to keep it as real as possible. I don't want to become one of those YouTubes that is constantly getting fancy and trying to sell you on things that are not going to increase your P&L or are not going to protect your bottom line. Fancy video editing and fancy footwork on the YouTube video is not going to make you a better trader. So I apologize if there are some flubs and mishaps throughout the video, but this is just one take, I think, aside from the intro, which I did cut. But yeah, let's move along. Let's take a look at the market, and then we're going to head over to that other tab as if it's another location. And we're going to look at a tool that can be or rather will bring a lot of, hopefully, value to your approach. So taking a look at Bitcoin. All right. This to me is just not a trade that I can not take. It's not a long that I can not take. So what I mean by that is we had a major break in market structure. And let's go ahead and change that ink color. We had a major break in market structure. All right. And the tool that I'm going to be referring to, or one of the indicators, this is with two different settings, is on the chart right now. So if you're confused what you're looking at, that is what we're going to be getting into. So take your guesses. You won't be rewarded if you're right. Anyway, so this is major area within market structure. Served as a turning point multiple times over. This was the point of control for this previous range. So that higher time frame consolidation that lasted, I think, 89 days. We're going to look at that. You see that lines up with right here. We're looking at essentially on the weekly chart. That weekly level is, where are we? 10,000, let's say 10,200 area, roughly speaking. Always keep in mind, roughly speaking. It's not a laser, it's not a line, it's not a, it's not a fine line on the chart. It's an area that you need to start paying attention. That's the best way I could put it. It's never just a line on a chart. It's an area where you're going to start, where when price approaches this area, that is going to be the area where you're going to be looking for hopefully the response that is, conducive to the trade you're trying to take. So you're looking for strength in this area when we're approaching it from the top side. So when we're coming down right now. So this for me is just not a trade that I'm going to try to anticipate breaking down before it actually occurs. So what I mean by that is, among the thousands of trades that I will take, I will not get caught shorting this before it breaks down. It just doesn't make sense to me to do that. There are thousands of trades that I can take, and for this trade, it seems like it's rather important. It has been a very important level for a really long time, and now we're getting the first major retest. And after a very bullish break in market structure, you're not going to get a pullback right away in one of the first candles. You'll have some time transpire. You'll consolidate for quite some time again. We've done this now for, it's been a while. We've had 1, 2, 3, 4, 5, 6, 7, 8, 2 months, right? 2 months and 1 week since that major break. So a lot of time has passed. And this is actually on par with what the normal amount of time would be. After a major move within market structure like this, we would have about this amount of time transpire, and we would have a decently length pullback as well. So that's what we have right here. It's not supposed to be easy. It's not supposed to give you the clearest sign that it's a clear long and everyone's going to ride the train to, higher prices. That's just not the way it works. There's plenty of fake outs that are going to occur. There's plenty of times where if you're monitoring on the lower time frame, you're going to be doing a lot of second guessing of, how strong your, or we'll just use, intestinal fortitude. I was going to say a different word that rhymed with intestinal, but how much intestinal fortitude you have. For me, it's just very simple. I am taking spot positions off of here. That means that I stepped in front of this blind. I didn't wait for a sign of strength. I just stepped in front of this, and as long as it was maintaining this level within market structure, it was completely fine. I take swing positions, levered positions, positions with increased exposure when I see signs of strength. So that's when I'll go down to the lower time frame and look for that sign of strength. And I'm not just going to be stepping in front of something, getting the first hit, right? Excuse me, I'm not going to be taking the first hit. If I do ever take the first hit at a level, I'm probably going to be getting out within a certain amount of percentage, right? So what that means is, let's say I'm standing in front of a level and I'm first to get hit at a major contextual level. I'll probably pull out after 2-3% and take it as an initial scalp and then monitor that level afterward. So that being said, I added a spot over here. I've been in and out of swing trades. I've been in and out of scalps, but I haven't really seen exactly what I want to see yet to add to any longer term swing positions. That being said, I am still bullish, right? Just because we're bullish doesn't mean we have the setup that is appropriate for our position, okay? That is one of the problems with a lot of new traders. They look at the chart and they think they have to pick a side. They think they have to either pick long or short right where the price stands. And that's simply not the case. You have to wait for your setup. You need to get into an area where you can very cleanly define your risk. And that's why I always use the term contextual risk reward, because you want to have your risk defined around a level that would almost validate the opposite trade coming to fruition. So if I'm looking for a long here, my invalidation for the trade almost by definition means that there is a short opportunity right on deck, right? Not that simple, because it's not always, hey, if that didn't work out, then the short opportunity is right there. But that's how you should start thinking about it, right? The opposite becomes true if your trade moves past a certain point, which means, hey, price is still supposed to be up here. If If it's a long, then why the hell is it down here? Right, very simply. So for me, this is an area where I just can't short. There's a lot of people that are shorting this based on this break in market structure. And I think that the more important, I was going to say something else, the more important thing to pay attention to is the bigger picture. Missing the forest for the trees right here. I think a lot of people are doing that. But that being said, I'm taking the trade. I could be wrong. And if I'm wrong, you know, kudos to everyone who took it in anticipation of it breaking. But that's a tough one to swallow. You're anticipating a major level within market structure breaking, when in the last week we're actually showing the signs on the higher time frame that I would want to see for signs of positioning on the higher time frame being in my favor. So what I mean by that, and again, this is no cut, so I'm choking on something. It's the chicken parmesan I just had. I put a bunch of Parmesan cheese on it. So what I mean by that is, down in this level, there were signs that spot was showing a lot of strength. So what I'm talking about is the futures were trading at a discount to the spot price. So let's say that BitMEX was trading at 10,000. Okay, the spot price was trading at 10,020 consistently across the board, multiple spot exchanges, multiple derivatives exchanges. Now, BitMEX is going to be one of the primary ones we pay attention to because it's up there in terms of top 2, top 3 in terms of open interest. So there's a lot of gunpowder on that exchange. So it's definitely one that I want to keep in mind. But nevertheless, this area was an area where we were seeing that discrepancy between the futures and the spot price. And when I refer to futures, sometimes I'm talking about futures term structure, sometimes I'm talking about perpetual swaps. In this case, I'm talking about perpetual swaps, which would be essentially your front month future if you were trading any other market, right? It'd be considered the front month, whether you're trading front month ES, front month crude oil contracts. Our front month derivative is the perpetual swaps. Okay, so that is pretty important to me. It says that there's a lot of traders on the derivatives exchanges gunning this to the downside, open interest increasing, showing that they're positioning for a break, but the spot exchange is putting in the floor. And that's typically what you'll see. The spot exchange is going to put in the floor. There's a lot of buyers that are willing to step in on a spot exchange at an area that's not necessarily that precise because they don't have to worry about being forced out of position. There is no margin, there's no leverage whatsoever, okay? There's going to be no involuntary selling on a spot exchange, right? So that being said, this area is an area where I'm looking for longs, okay? It's as simple as it gets. I'm looking for longs here, and I'm looking for ultimately a test of this high. All right, so that's again around 14K, and it is what it is, right? If the trade doesn't work out, so be it. We'll live to trade another day. But my major point is I am not going to wait this long. This is how simple it is. For someone who's from New York and hard-headed, I'm not going to wait this long and see this opportunity arise and not buy support, right? I would be kicking myself. I'd be remiss if I didn't buy this support, even if I did it like that, right? So that being said, ETH is no longer really showing signs that it's leading the market. I think that ETH has likely become more of a crowded trade than BTC. It's the higher beta play. We could see that ETH put in quite an extension above its own market structure relative to what BTC did. So we normally see this. ETH normally has more follow through, but I think in this case there was a lot more follow through. And you'll typically see that when momentum builds up in assets, it's the momentum traders that will chase it to the extremes. So your momentum traders in traditional markets, in crypto, in all asset classes pretty much, are going to be the last ones to really throw price, right? They're going to be chasing momentum, and they're going to be the ones that are causing price to get into that point where there are traders offsides. So I think, can we just laugh at that? I think that that's where ETH is, and it's just got to correct a little bit more than BTC because ultimately it reached a higher level of altitude than BTC did. So ETH doesn't look like it's sitting on a cliff to me. It's showing signs of strength right here. In terms of the type of base that I would want to see, it's setting up. All right. Ultimately, with ETH, I would want to see it back above this 392 level. I've been talking about that level for a while. That was a key level back here within this range in terms of our point of control in a major area where a ton of volume was transacted. And as you can see, what we're looking at with this dark black line, what we're going to get to, that's a very important level as well. All right. So I don't want to spoil it and go into it right now, but we're going to get to that in a second. So BTC doesn't look bad, right? It's at support. In terms of the lower time frame, because it's the weekend, lower volume, thinner activity, size down. That's how I operate. We are sitting between a rock and a hard place, right? For me, what I am seeing right now, considering that basis, and the fact that, let's get to what we're at right now, that we are now overtaking two key volume weighted average price points. So these are not points, excuse me, the VWAPs, right? So the VWAP is similar to a moving average. So your moving average, your simple moving average, is an arithmetic mean. So it's a basic average, right? The problem with a moving average is it doesn't incorporate anything that took place below the surface. It's based on, it could be based on a plethora of things within the candle, right? And it doesn't sound like there could be a plethora of things it could be based on, but it's not just the 4 data points. Default setting would be a candle close, but you could do the high-low range, you could do the high-low range average, excuse me, you could do the high-low open close, you could do a ton of things. Most of the time, there's not a ton of things, obviously there's a finite amount of combinations you could do, but most of the time it's going to be based on candle closes, right? Standard generic setting. So default on your trading view chart. So that just tells us based on where price has been, right? Based on where it's closed in that example. And if it's a simple moving average, it's an arithmetic mean. So there's no weighting whatsoever like an exponential moving average. So the VWAP weighs that with volume as well. So this is showing us essentially a moving average that incorporates the amount of trading activity that took place. So over time, depending on where this is anchored to, this is going to show us the volume weighted average price. So rather than get into too many of the specifics, I wrote an entire article on this on Phemex. So we're building a sort of educational platform on Phemex because an exchange just should not just have, the simple instructions of how to buy or sell, right? How to increase the leverage. You have to offer some type of education with regards to risk management, help traders understand exactly the tools that they're using. So I went into this here, wrote this article last week. I talk about, how I've used this in traditional markets, how portfolio managers might use this to find the area where there'd be least amount of market impact, where fair value is a term that we've gone into many times on BlockRoots. Think of this as a dynamic fair value, right? A moving fair value that is, again, anchored to whatever period setting you have. So you can anchor a VWAP to a session. So commonly equities traders might use a daily VWAP, get an idea of who's in control. And this is what I'm going to be doing with the VWAP. You could also use it on a longer time frame. So a lot of the time traders will anchor to a specific point. So let's say that there was a major supply shock in the crude oil market, right? You might anchor a VWAP from that period moving forward to see exactly the VWAP from a specific point in time, a major catalyst. You could look at longer term VWAPs, monthly VWAP, quarterly VWAP. There's plenty of different settings that you could look into, but the most common one is going to be your daily VWAP. I use a daily, I use a 3-day, a 7-day, and a quarterly. All right. You could use a monthly too, right? I've used all of them, but for my specific trading as of late, I've focused more on the lower time frames. So again, in traditional markets, this is a very valuable tool. It's not something that I've seen enough crypto traders use. And I say enough because everyone has their own style and strategy, but I think that you can definitely make good use of incorporating this into any approach. It's always good to have an idea of where the market has been putting on risk, which if I could reduce this into the most simple terms, that's the way it is, right? You could look at the VWAP as a portfolio manager, a hedge fund manager, and say, that's the thick area. I want to be able to get in and get out over there, right? Or relatively close to that. You could look at it as a short-term trader and say, I want to use it like my Bollinger Band setup. Whereas instead of a Bollinger Band with a 20-period moving average, like down this as the center line, you're going to be using the 1-day VWAP, right? And then your standard deviation bands, you could use them to mean reversion trade because, the assumption would be that if price has been, confined in a tight space and it's been chopping or ranging, that's fair value, and any kind of move outside of that will be an outlier and will revert back to fair value. So when I'm looking at VWAP, so similar to the way we're looking at it right now, and I'm looking at higher time frame VWAPs right here. Okay, so these are not necessarily the ones I'm commonly going to be referring to, but it is always good to keep in mind. The monthly VWAP is the red. Okay, excuse me, the monthly VWAP, let me just make sure that I have the right one set. So this is multi-time frame VWAP. You could find this for free on TradingView. The monthly one is the red. So the monthly VWAP is going to show us anchored based on monthly period, okay, where most of the risk was put on between buyers and sellers. And I'm going to try to oversimplify this so that you understand how this is useful in identifying who is more likely in control, or at least if who's not in control, who is maybe approaching their pain point, maybe who is approaching being in control. And I could just oversimplify this by saying, let's say that this is our VWAP. Price has been moving linearly sideways, right? That's not something that's common. So here's our VWAP, essentially fair value. Let's say this is over the course of a week. So 7 days, right? I'm not even going to try to attempt to write. So here's your 7-day weekly VWAP. Now, if we just assume one-for-one activity, which there is on exchange, for every buyer there is a seller, but there are not an equal amount of aggressive buyers and sellers. But let's say in this case there are equal amount of aggressive buyers and sellers for one-for-one, right? That's why we have this relative stalemate. If price is up here, and here's the VWAP, here's the one-day VWAP, okay? Who is more likely in pain if price is above it? Well, if we're assuming equal activity down there, and there were buyers and sellers that participated and got into position over here, right? Open interest is increasing, they're getting into contracts. They're not closing out old business. If we assume that, very simple terms, and price is above it, that means that longs are more comfortable, right? Shorts are definitely less comfortable. The same can be said the inverse to the downside. So price moves above VWAP, now price is below VWAP. So given that this is where buyers and sellers have interacted and put on the most volume over the course of the day, right? We're talking about a daily VWAP, a 7-day. So over the course of the week, now that we're below VWAP, so we're down here, sellers are more comfortable. We are currently sitting below where most of the risk was put on. So you can use this in your trading as sort of a barometer to identify who's in control. So if you're a short-term trader, you might use this on a daily session. But if you're a longer-term trader or swing trader, it's always nice to keep an idea of where these are with relation to where price is. Now we're starting to see that Bitcoin it's ranging. So this is important to distinguish because this is more important, I would say, after there's been a sustained trend in place. So in a sustained trend, you're going to be above your VWAP typically, all right? And your buying opportunities might be returned to VWAP, okay? This kind of pullback back to fair value. You're going to see that a lot of the times some type of systematic or algorithmic trading strategy might pick up on this opportunity to get back in at fair value, right? To scoop up this decline in value. Consider it that. Imagine that this is your fair value level right here. So here's fair value. When price has dropped in value, similar to the concept I say all the time, hey, if iPhones are very expensive and they drop in value, are there still going to be a lot of iPhones for sale? Probably not. Someone's going to buy up that opportunity and they're going to raise the price again. So when we are sitting above VWAP and we're trending that way, bulls are in control. Maybe you look at your weekly VWAP, your monthly VWAP, and you say, as long as we are above those VWAPs and they are above each other, I'm going to be looking for long opportunities. The minute we start chopping, might be in a different situation. You're still going to have to keep in mind where your range extremes are. Okay, but the moment that we have a break of that, let's say we have a break of that, and we see that again, we're holding weekly VWAP, daily VWAP, both of those, even monthly. At this time, if we continue to trend up, we'll be back above monthly because it's slower, right? So this is just a tool that we can use to identify who's in control, okay? When we begin to shift over one, right? So when we're approaching one from the underside and we're beginning to close over one, this might be a good opportunity to get involved at the first pullback, because you'd have to imagine if I am getting short up here, I'm getting short up here, I'm getting short here, and it's making it so that the VWAP is currently above us, right? Once we start basing out and VWAP starts flattening out for the course of the last week, there are going to be more shorts that got in closer down here relative to where that VWAP is. As soon as we start trading at higher prices, just consider the idea of putting people in pain. What does it feel like when a trade moves against you? You're in pain, you want to close it out. As soon as we start overtaking that VWAP or those anchored VWAPs, you could start to say that control is shifting. Maybe the control at this point is shifting towards the side of the bulls. And this represents really good opportunities to get involved in some of the first pullbacks that you get. So let's say that price breaks a key level. So right now, here's our resistance that we're looking for. I'm ultimately waiting for price to test this 11K, 11.2 level. But if we're back within this range, right, now we're back above our weekly and our monthly VWAP. It looks like the trend is probably going to continue. Okay, and at that point, bulls are in control. So this is just a tool that you can use and add to your trading. And I would say just start simple. Start with your weekly VWAP. So let's turn off the monthly VWAP. Excuse me, it was the red that was the weekly. So let's leave the weekly VWAP on. Okay, and when we're in a trending structure, which right now we're more of a ranging structure, use it. Okay, if we start closing below VWAP, hey, maybe that's the sign, the same way that in BlockRoots, if you're not a member of BlockRoots, give it a trial. The same way that we talk about when fair value or our value area begins to overlap. So when we go from having value that's continuously moving upward to value that's now moving sideways and we're chopping around it, hey, that's probably going to be the beginnings of a range, right? Because buyers have no longer been able to raise the value of this over time. So VWAP is a tremendously valuable tool. Okay, valuable. I've been saying that too many times. Okay, so got an itchy nose. But doing one take, like I said. So if you have more questions on the VWAP, absolutely feel free to message me on Twitter. This is just a very simple way to use it. Okay, when you're above VWAP, bulls are in control. When you're below VWAP, you could say that bears are in control. And if you're a short-term trader, looking at something like the daily VWAP can be invaluable, right? Combining with VWAP, which is essentially, if you think about it, it's one part of order flow. Combining a VWAP with any kind of trend-based system can be something that really, in my opinion, gives you that extra edge. Okay, so a bunch of different VWAPs. I would say go ahead and use a multi-time frame VWAP. If you're using Sierra charts, as you can see, if we go to my Sierra charts right here, so we'll just open this up. I have multiple VWAPs on it at this time. I have my 7-day down here. I have my 1-day up here. And again, all I'm doing is I'm looking at this immediately. I'm seeing who's in control. I could use this as potentially dynamic support or resistance. So when I know that we're approaching VWAP from the underside and we've been extended from it for quite a distance, one that might represent a mean reversion opportunity, because if we assume the same way that we talk about fair value, so let's say this is our distribution and we have extended far below what our fair value was. God, can I say that correctly? Fair value was, okay. This represents an opportunity to buy that up, because what do you anticipate? Things will move back towards their average, right? So hopefully this has been useful. I think that BTC is still bullish, right? I think it is still bullish. I think it's in a really important level. I wouldn't really overmanage this one if you're in spot positions. For me, as long as we're above this area within market structure, this is a loose area, right? It's not a specific one grain wide line in the sand. This is a loose area. You can see many times over there's been just a general area that served as resistance. And why would we anticipate anything different upon returning back to it? Right? We could chop around here, and as I said, one of the really good signs is still seeing that we have this basis. Okay, so this premium index, that's showing you that there is a discrepancy between the spot prices and the perpetual swaps. And in this case, go ahead and go through history and see how many times, after putting in this sustained negative basis, which is actually the opposite of the way the term is used in traditional markets, go ahead and see how many times we've done this and then continue to do that. I'll give you a hint. I don't think you can count it on more than one hand. That being said, guys, take a look at this article on Phemex. As always, exercise proper risk management, trade effectively, and on behalf of my partner Josh Rager and I just want to thank you guys for tuning into BlockRoots. As I said on this YouTube, we're going to be incorporating more of these types of educational videos as well as our market analysis. And until next time, take care.